What's going on, everybody? Is Way with the Playbook, and today y'all read the title, explaining the truth about trends. Okay. Hope you have a notebook, pen and paper, like the video, add it to your playlist, do something, because this video is going to change how you look at the charts and how you trade in general. Okay. So we're on gold right now. Now everybody knows how trends work. Everybody understands, you know. So what are we in right here? We're in a uptrend. Higher high, higher low, higher high, higher low, higher high, same low, rejected up, and then dropped. Now we're in a downtrend, etc. Now, do you ever wonder though, why? Okay, so we understand that part, right? We understand how trends work. But the issue is determining where price is most likely to go. There's also something else you got to think of before even thinking about that. First, are you on the right time frame? Are you on a high enough time frame? If you're not looking at a 4 hour or above time frame, a lot of times, the trade might not go your way, or you might be going in profit, everything might be good, and then out of nowhere, just completely just smacks your, just goes straight through your stop loss and just keeps tanking or rushing up, whichever way you're not going. You know what I'm saying? I know that's happened to somebody before. I know that's happened to somebody. There's a difference between price just shooting down candle after candle, and then there's a difference when price does something like this. When price does something like this, compared to just gradually going down, when price just shoots up off one candle instead of multiple candles. This is a 4 hour time frame. This is on gold. So that's crazy. That's 1888, wait, 1891, 1991. That thing shot up over 10,000 pips in 4 hours. That's crazy. Do y'all not think that's crazy? I think that's crazy. But now that brings the question, why did price do that? Why did price reject that so hard and shoot back up within the same candle? That's not normal in a trend, right? Look, we got this downtrend right here. Do you see any? We see that, but I'm talking about in general. All these candles are big like that, but they're not like rejection candles. So you gotta question and think. Then why do candles do this? Why do they reject like this? What is it that's stopping the candle from? What's making the candle react like that? That's what you got to think. You got to think about that. Every candle is telling a story, and you have to read, observe, and understand what that story is. Okay. So also, the reason why I say you got to be on a bigger time frame is because, like I said, you're looking on smaller time frames. Yeah, you could be still going with the trend, but you still might get smacked, or you might not know completely where price is going to go. See, we want guaranteed pips. We don't want to guess. We don't want to gamble. That's what makes trading, not that. We want to know where price is going, and we want to secure money, secure pips, and to walk away out the market with more than what we gave them every week. That's the ultimate goal. Okay, at least that's my ultimate goal. So what I'm doing is I'm not trying to shoot for some random number or, oh, well, it's going up, so I'm gonna just go to this, and nothing like that. I am determining exactly where price has gone before in the past, and I'm putting my money there. So look here, look, we had this uptrend starting gradually, and then just shot up. If it shot up this high, if it price shot up all the way gradually, I know price is eventually going to have to come back down here. So the next question you have to ask yourself is, well, what will be the first checkpoint? Because I don't know about y'all, but I'm not trying to hold a trade for a week. A day the longest, 2 days max. I'm not trying to hold a trade for the week. That's just me personally. And we don't have to. As you can see, and if you're in the free signal room, that we catch thousands of pips daily consistently. And that's not holding trades for 2 days or a week. We'll get in there London session, get out before market closes, if not earlier. And rinse and repeat every day. Get in London session, get out when market closes or before market closes. Get in London, New York session, get out every day. We make money every day. We take the money every day. We're not holding for multiple days to catch a certain amount of pips. People hold for multiple days, try to catch 1,000 pips. We consistently catch 1,000 plus pips daily without holding for days. And if we can do it, you can too. There's different strategies for trading, but and you saw earlier in the video off that 4-hour time frame, that rejection was over 10,000 pips. 10,000 pips off one trade, 10,000 pips a day, that's 50,000 pips a week minimum. I don't care what lot size you put in, 50,000 pips a week is a lot. You know what I'm saying, guys? Even off, you know what I'm saying? That's a good amount of money a week. Enough talking. Let's determine where these zones are. And if you don't have me on Instagram, I highly suggest you follow me on Instagram, because some stuff I post on Instagram that I don't post in the free signal room. Like I said, it's just a free signal room. So if you want like tips or like random, you want like tips and stuff like that, or you're interested in seeing like just, daily Forex content, I post that. I post daily results in the signal room. I post daily like chart markups or like, tips to help you in the market, all types of stuff. So check it out. Make sure to follow. Price was choppy here, and then when price went up, it went back down and got choppy here again before it broke under. Why do you think that happened? And y'all that watched my support resistance, my price action video, y'all know why it happened. If you haven't watched it, link it will be in the description. So go ahead and make sure to watch that, because it'll help this make a lot more sense, I promise you. So that's not a coincidence. And I guarantee if we go look to the left, there's going to be choppiness to the left as well. So let's go take a look down memory lane. Oh, what's this? Choppiness, rejection. You think that's a coincidence? Look at this. Do y'all really think this is a coincidence? Look at this candle right here. Y'all really think that's a coincidence? Look at that rejection. Then just broke under. Look at all this rejection. Look at all these candles. Look at this candle. That's crazy. Look at all these weird ass candles, right? Like around this fucking line. Look at these weird candles around this line. Look, you know what I'm saying? Look. I'm just going left. Look, again. Why do you think that is? Let's keep going. Shoot, let's keep going. Okay, like, you see that? Like, and let's find another one. Look, all this choppiness here. Then it broke up, then choppiness again, and then broke out. And then look, choppiness again. Like, look at these candles. Like, That's a crazy candle. And then this giant candle just pushing after it broke through this. Why do y'all think this happens? Over and over and over again. Why do y'all think this happens constantly? Look at this. Any chart, and you're gonna find, it's not gonna look exactly the same, but you're gonna find similar stuff. Look. Look how it's just reacting to this line. And then look, this other line I marked up. Boom. Boom. Look at that. That's crazy. Now let's go to a.
Good looking, MG, my nigga.
DJ. Perfect. Perfect.